Today I'm joined with Andrew Sorenson from WAK Kaolin. We've been watching the stock recently and we see that it's posed for growth in the coming quarters. And what we thought we'd do is we'd get Andrew in just to give an update on how the kaolin market's progressing, what's happening internally with the company and how the company's set up and where we think it's going to go. As always, this is not investment advice. This is just a presentation, a fact-finding mission, just to give you information of what's happening in the financial markets, in this particular instance, kaolin. Without further ado, I'd like to introduce Andrew Sorenson, CEO of WAK Kaolin.
Hi, Sean. Thanks for having me on the show. I've got a presentation that I can walk you through to give you all the latest information.
That's great. Well, let's get started.
WAK Kaolin is a business that has mining tenements in Wickepin, which is a town about 2.5 hours drive from Perth. It's a kaolin mine, and the kaolin is used in a variety of applications throughout the world. It's a $5 billion US market across the world, so it's a significant size market. And the market has favourable dynamics at the moment, in that the demand is increasing faster than the supply, so there are favourable pricing conditions there. WAK Kaolin has a very large resource. It's a world-class resource, and we've got a 31-year life of mine with 30 million tonnes in our ore reserve estimate. We've owned the project since 1999 when we purchased it from Rio Tinto, and we've been developing the technology and the markets in that time, and we've spent quite a bit of our own money to get us to the point where we are today, where we're poised to expand our existing operations. Part of that preparation that we did was about building a process that's unique to our company and provides us with a very low cost process. We call it the K99 process, and it's a dry process for beneficiating the kaolin. And we've prepared a large number of agreements with customers, and those customers are based in China, Japan, Vietnam, Australia, and other locations as well, such as Taiwan.
Thanks for that, Andrew. This business with kaolin, is there a high CapEx involved?
Well, no, Sean, it's a very low CapEx business, because for each module of 200,000 tonnes of production, such as stage one that we're building right now, that's $18 million spend. So given the amount of revenue that we can generate from that, it's a very low CapEx intensity. We've also got a staged ramp-up plan, which basically means we build these 200,000 tonne modules, and we add those modules as we penetrate the market. And our staged ramp-up plan means that we can very much match our growth and to our cash flow. The kaolin market, hasn't been well known traditionally in Australia, but there's been quite a lot of excitement around kaolin in the last, say, 3 to 4 years. And traditionally, the kaolin is used in ceramics for the body of the ceramics, and that's used in tableware, sanitary ware, tiles, and a whole range of ceramics. It's also used as one of the key ingredients in fiberglass, and the growth in the fiberglass market is quite strong at the moment. So that's driving a lot of the demand. And traditionally also, kaolin's been used in the paper and packaging industry. There's also HPA. HPA uses kaolin as a feedstock, and that's another very important emerging market for kaolin. And just you can see the size of the various markets in the global picture. So you can see just shy of $5 billion US, with paper and ceramics occupying the two biggest areas in there. But you can also see it's used in plastics, rubber, pharmaceuticals, and cosmetics, of course. And if you look at the chart on the right-hand side there, you can see that the Asia-Pacific market is the largest growing market and also the fastest growing market, and we're ideally placed to be servicing those markets.
That looks great. With your actual project, though, with the different markets, we obviously look at different projects and want to come back to the cost curve, what it costs to actually produce the commodity. Can you go into a little bit more detail about your particular project and where it sits in that cost curve?
Oh, absolutely. WA Kaolin has a very low-cost production system in the K99 process that we developed. And the reason that we are able to have this cost advantage is because the kaolin that we have in the ground is very pure. It has low levels of impurities and it has a high brightness. Most of our competitors have to beneficiate the kaolin using chemical bleaching, magnetic separation, what have you, to achieve those levels. So we're blessed with a very high quality material, which means that we can have a low cost processing route. There's no chemicals, there's no magnetic separation. It's simply a matter of removing the unwanted materials by particle size and then packaging the material into bags ready for export. The location of the site is in Wickepin, and you can see on the chart there that's about a 2.5 hour drive. We also have a number of tenements. We have a mining tenement that has 996 hectares, and then we have several retention tenements which total up to another 9,000 hectares. And overall, the entire project, we've got 640 million tonnes of kaolin in the ground across the mining and retention tenements.
Okay, that's fantastic. Now, with the actual project, you've got the assets sitting there. You currently, from our discussions, you've got the pilot plant that's been operational, been quite successful. You've IPO'd, you've raised some money to go to stage one, which you're working on at the moment. Can you elaborate on the growth of the company of stage one, stage two, and what that entails?
Stage one that we started constructing after we did the IPO will come on stream in the last quarter of this year or early next quarter once we finish commissioning. A lot of people don't understand about us that we are an existing operation. So we have operations in Kwinana, which is a suburb of Perth, and we run 5 days a week, and we produce about 8 or 9 containers out of that pilot plant. The pilot plant was set up to do the market development and develop the process, but now it's serving as a quasi-production facility, just producing orders for our existing customers. So this stage one build, as I mentioned, will come on stream in the first quarter of 2022. And then we're going to follow that up fairly rapidly with a stage two ramp up, which is another 200,000 tonne module. That currently looks like it'll come on stream in 2024. And then we've got the ability to scale up even further with additional 200,000 tonne modules into the future.
Okay, that's terrific. With stage one, how is that build going? How's the progress going? Because it's been approximately 12 months since you've listed. How have you used that money? Are we getting close to completion? With COVID, I'm sure you would have had some difficulties. How have you navigated that?
Look, yes, we were pretty fortunate in that most of the packages that we put out for bid and tendered were done before the major impacts of COVID that have hit us this year. So things like the building, that was completed to a large degree by March of this year. And then all of the equipment that we ordered to go in there has been on order since November, December last year. So we're in a very good shape with our construction program. You can see the picture of the building there. As I said, it's essentially complete. We're at the process now where we're installing the site power with gensets. We're installing the LNG facility, which is liquid natural gas. That's supplying the kiln that does the kiln drying of the ore before we process it. And yeah, we're in good shape. So construction will complete in the last quarter of this year, and commissioning will roll through from there into Q1. And you can see in the slides here that the things that are on the critical path for us are basically the electrical installation and mechanical installation, and they're both going on track with target. So we're in a good shape right now.
Congratulations, that's good to see. Who are your customers, and is the market able to take in that extra supply that you're putting into the market?
Yeah, well, so from a macro point of view, the 200,000 tonnes represents less than 1% of the accessible market that we're going after in Asia Pacific. So from a macro sense, we're not going to tip the scales in any degree with that even the 200,000 to 400,000 tonnes of the first couple of modules that we put in. And specifically, we've got existing customers who have offtakes and letters of intent to take product from us. So when we combine just 2 of those customers, that speaks for about 80% of production for the first 3 years of this project. So, and that's what all the time and money we've spent up until now has been about, is developing the market, getting those customers in place before we commit the CapEx into building the plant. And you can see on the chart here, these are some of our existing customers and the percentage of their production that we've given them up until this point. And it's across all the geographies we want to be in, and it's across all the market verticals that we want to be in, such as fiberglass, ceramics, packaging, paint, building products, cosmetics, and what have you. So, in the industrial mineral space, if you don't have customers, you don't have a business. So that's where we're very well prepared in having these customers ready and waiting to take the product.
So will they sign offtake agreements with you?
Yes, so one of them has signed an offtake agreement, which represents about 40% of the volume. That's covered by a 6-year offtake agreement. And the other major customer is currently sitting with an LOI for about another 30% of the production. And then we've got existing customers who are just basically buying on orders as we speak. So we're in pretty good shape, and our sales and marketing team have identified lots of new customers, and we've got at least half a dozen new customers, big customers in the pipeline approval right now, ready to come on stream next year.
I think we spoke a few weeks ago, and you were saying that you had no spare stock with the current supply that you're doing up till Christmas, which is very good to hear.
Yeah, we're sold out. It's not a comfortable position. We should have built this project probably 6 months ago, but we're negotiating delivery schedules with those customers, and yes, unfortunately, we have no capacity until December.
Well, that's good that you're growing then, isn't it?
Yeah, it is. It's a good position to be in, but it's part of just managing that growth of the company. It's all about the key to success. Successfully managing the growth.
One thing that I've noticed in the past when I'm investing in companies, it's called skin in the game. I've had a look at your corporate structure, and I'd like to have our investors and our audience and the shareholders get a little bit more of an overview of your corporate structure. Can you just elaborate on who are your major shareholders, what management's got in the game, and how committed management are to making this succeed?
Well, absolutely. So our 2 biggest shareholders are the 2 proponents of the project who are originally involved since the purchase from Rio Tinto. They hold just over 17% each. And the total, when you add in all the board directors and what I'd call insiders, other promoters who have assisted us along the journey, we're just around 40% of the shareholding is with them. And our top 20 shareholders carry just under 70% of the stock.
That's phenomenal. So they've got a real interest in making this work. Talking about the board and the team, can we just get an overview of who's involved in their background, just so we know that management, as well as being vested, they've got the experience to tackle this project and to move with the growth?
Oh, absolutely. So, of course, there's myself, CEO. I've worked in the industrial minerals business for many years. Our chairman, John White, is a great chairman, and he's a non-exec chairman. We attracted him to the board. He's got a very wide range of experience in implementing major projects, and very highly skilled in management. He headed up busy global operations for the Pratt family for some years. So that's a very good advice to have as our chair.
Good resume.
Alf Baker is one of the proponents of the project who've been involved since 1999 and holds just shy of 18% of the stock. Alf is the executive director, so he works on the project, and he's had a lot of experience in building businesses before and in the industrial minerals space. And then our two non-exec directors, Linton Putlin, who is a mining engineer with lots of experience, both in Australia and overseas, and Kathy Moises, who was head of research for Patterson Securities. She covered the stock for Patterson's in the early days and liked what she saw, and we were able to attract her to the board as well. So very glad to have those non-execs on. And Michael Kenyon is our CFO and COSEC. He's a safe set of hands, a lot of experience with ASX listed companies, and has been vital to us in sort of growing the company to where we are today.
That's excellent. I guess we've covered a lot today. We've looked at the asset, I guess the commodity, low cost quartile. You've got good customers now. I guess what everyone wants to know is how the financials work. I have seen you've done a definitive feasibility study on this. Can we just have a quick look at the numbers to see what we could expect potentially moving forward?
Yeah, so the DFS was done and it's published on our website for those who want to check it out. It's got very strong outcomes when you look at both the stage 1 and stage 2, taking us to a total of 400,000 tonnes capacity. It's got an NPV of $257 million and an IRR of 47%. And it's a very strong outcome. And when you look at the numbers over the period of the project, we're showing a total of 3.7 million tonnes and a total sales of $1.2 billion. So it's a huge outcome. Average selling price of 321 over the period, and an EBITDA value of $350 million. So that's a very strong outcome for the DFS.
That does look good. Listen, Andrew, that's a lot of information for our shareholders today and our investors and people who are looking for the next opportunity. I can't thank you enough for your time. I do know that you've been available to us to ask questions, and if investors have any more questions, I highly ask them to send me an email and I'll endeavour to calculate them and I'll shoot them through to you and get back to you in due course. But with the ramp up in production happening in the first quarter of next year, those numbers do look very good. I think this is definitely a share to watch. In relation to your peers, where does WA Kaolin sit?
Well, we sit in a very favourable position on a number of fronts. The size of our resource is massively larger than our peers on the ASX, and you can see that in all of the releases by the various companies. And also our cost curve. When I've had a look at the DFSs that are being put out and the PFSs by Andromeda and Servo and others, and we have a much lower cost base, and we've got that proven because we're an operating business who are producing at the moment. So we've got a very positive and strong position on both the cost curve and the size of our resource.
Thanks, Andrew. That's great. If investors wanted more information, where would you direct them?
Well, I direct them to our website, Sean, because we've got our DFSs on there. We've got a ton of information on the Kaolin market itself, and there's also been some other research that's done by other parties, which is published on our website. So I do encourage everyone to go to our website, which is www.wakaolin.com.au.
Listen, Andrew, I've really got to thank you for your time. It was very informative. I think our investors and our audience will really enjoy hearing from you. I know I have. I wish you best of luck with this ramp up in production. I'll certainly be watching it and looking forward to seeing what happens. And yeah, good luck.
Great. Thanks very much, Sean. It was great to speak with you today.
I'll talk to you soon. Thank you.